Yes, it is. The market has been gradually improving since 2016. And this is broadly in line with the improved and sustained oil prices that we are seeing today. Utilization figures for offshore drilling rigs and construction vessels have correspondingly improved too, with some regions and segments faring better than others. Now, this is partly due to the efforts of contractors to reduce operating costs, remove non-core assets by scrapping or selling them out of the market, by diversifying their service offerings. With regard to asset values though, despite the market recovery, these are still trading at record lows due to the acute and ongoing oversupply situation. Prior to 2014, when the upstream sector was still doing well and oil prices were at $100 a barrel, contractors borrowed heavily to fund their fleet expansions. During the sharp oil price drop in 2014, investment in the sector was throttled and projects were cut back. A large number of assets were chasing fewer jobs, leading to plummeting day rates. Asset values also correspondingly fell, leading to a wave of financially distressed contractors. Some have gone bankrupt and some have exited the market altogether. As a result, asset sales in the last 2 years have increased. These are made up mainly of cold-stacked vessels and also forced sales from financially distressed companies. The market is thus still oversupplied. On a positive note though, there are signs of recovering asset values, particularly in the harsh and deep water segment. This segment requires marine assets that are technically more stringent and are more expensive to build, and hence creates a higher barrier to entry. This segment is not as oversupplied compared to assets working in shallower waters. For example, current asset values for the latest generation of floating drilling rigs are now about 50 to 100% higher than the low seen in 2016. With the expectation of more deep water work in the future, we may well continue to see improvement in these asset values. So to summarize, 1. Things are improving, but slowly but surely. 2. Marine asset values are still depressed because of the ongoing and acute oversupply situation. And 3. But there are exceptions, in particularly the high-spec deep water assets.